All right, ladies and gentlemen, I hope you had a wonderful day. It was a boring day for the stock traders, a wild day for the bond traders, and now, if you haven't been paying attention, the dollar, gold, and bonds are all breaking ahead of the election. So if you are not aware, we only have 10 days until the election, 10 trading days that is, so it's longer than 10 days, but as far as the market is concerned, we only have 10 sessions before we decide on a new president. But this is why I was talking about the front run yesterday and all of these potential trades, because something is definitely happening. So I got to start here with the last key of the day. We won't have to wait long because the election is right around the corner. And believe it or not, this one's kind of an anomaly. Right now, they are actually projecting that election day, the market will move about 2%. And believe it or not, that is one of the lowest projections that we have had in years. So that's one interesting part. But the other factor is that coming into this, you are watching very big macro things that are starting to make huge moves in advance, regardless of who is expected to win. Obviously, the odds are moving back and forth, and you could pick your favorite, but I really hope you guys are seeing in the last 30 days, or really since the beginning of October. I don't know what the October surprise is going to be, but you are watching the dollar literally skyrocket. Gold is going crazy and hitting all of these record highs, and it is kind of correlated to all of it. You are watching the bonds drop. Now, the bonds started ahead of October, but again, from the beginning of October, you could see a ramp up or down in very specific assets, and these are gigantic moves ahead of the election. So we're going to talk about that a little bit. There was a lot of drama surrounding the bonds, those war headlines. They did come back a little today, but then once again, it was about earnings. We're going to be getting over 100 companies from the S&P this week, and then after this week, you're going to get a little bit more bigger data, and then the big companies, the election, and then Jerome Powell. So I got the keys, the plays, all that good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, let's talk a little bit about today. And if you're not understanding why gold, the dollar, and bonds breaking is so important, the fact of the matter is, go look anytime you have watched ramp up or downs in all of these assets, especially when they're large. Something is usually happening. What makes the most sense is that coming towards the election, either before, shortly before, or probably right after, we will be experiencing an economic shift for better or for worse. It does depend on policies and how these other things roll, and especially if we get a macro event. So hopefully you guys are watching out for that. But what you saw today, I hope you don't get twisted. Like I said, it was boring in equity land, and equities are moving on earnings. We woke up today and there was a lot of back and forth, and it felt like stocks were selling off. The bonds were getting destroyed. You heard a little bit about the war, but gold ended up selling off from the highs. Oil didn't hold up. The only thing that moved was bonds, and this idea of both the Trump trade and higher for longer and soft landing and less rate cuts, that really took over, and once again, the bonds really sold off. That seems to be the only narrative that's developing. You did get a little bit of back and forth on the war, but we didn't get much, and over the weekend, there was a leak of Iran documents. I forgot to bring that up on the watch list yesterday, but some people are assuming that that may slow down an Israeli attack on Iran prior to the election. So we'll see how that all plays out. But the fact of the matter is, do not get confused by these earnings moves. That's what I'm saying here. For crying out loud, NVIDIA was up. A lot of people are like, what's going on? Why are we selling off? Why are we doing this? Is it because of the war? It's like, no. If you actually go look, Apple, NVIDIA, a lot of names were up. You were just getting that push and pull as we are getting ready for a big week of earnings. That is going to dictate a lot of of the equity moves, and we've moved up like 150 points since like 2 Tuesdays ago, and you could kind of see that we are just hugging the all-time high. So I'm not worried about equities. Maybe if the dollar, bonds, and gold start to go crazy, we could be more worried about that. But for now, it seems like the rate debate, that is developing. Maybe it'll hit a wall, and then eventually equities and other things will move. But it seems like we got to get through earnings and then the election and all that, and then maybe we'll start to see some things catch up. So that's the first key. Watch out for that. The second key, like I told you guys, there is only 10 trading days until the election. And now why this is so important is so you could plan, whether it's a TLT or a bond play, the dollar, you're going for big tech, energy, oil, it doesn't matter. And this is why I did bring up a lot of those front run trades, and I want you guys prepared, because the fact of the matter is, any idea of, oh, this will happen before or after the election, well, yeah, it's about to be proven very shortly. So whether the Trump trade comes true or not, you don't have to wait long. People can talk, and so could short the bonds or buy the bonds, but when it's all said and done, if we are going to get a sweep, if Trump is going to win or it's going to be Kamala and the policies, you are going to find out very shortly. And then after that, I'm sure a lot of things are going to develop from there. So keep that in mind, and hopefully now you could think about this while you're planning. And then, like I told you guys, with all of this in mind, with theories about to be proven or not, I would keep an eye on gold, the dollar, and bonds. But like we were talking about yesterday, understand what different outcomes could mean, and if we get anything bad from earnings or in the data, know how to position from there. But very shortly, in the next couple of weeks, trading wise, you will be getting a lot of answers and a lot of data. So it may not seem like equities are moving now, but other asset classes are getting a head start, and before you know it, you are going to hit a wall of volatility and events left and right. Pow, Alexia, boom, pow, pow, pow. It's going to be everywhere. So we will see what happens and whether or not the data or the economy is going to take a shift. So, Chad, I hope you're ready for all of it. I hope you're locked in and got a long term. But now, let us get into the plays. So, right off the bat, I have a couple of different plays, and I'm going to start with one that has earnings tomorrow. I made a play on it this morning. We'll go over what I ended up doing, but either way, I like this for a post-earnings. 3M, they are one of these recovery stocks. Remember that new CEO? They have been killing it. The stock is up 40, 50%, something ridiculous, and that means this earnings, it is either going to keep that momentum or it's going to lose it. And believe it or not, it's an industrial, so it kind of plays an important role with some things macroeconomically speaking. So I would watch out for it depending on how they report. If it does continue the momentum, I think there's going to be a lot of juice still to the upside, maybe just hype, but then even to the downside, if they fail that recovery, 3M has moved up a lot and they can go back down a lot, just how some names like Nike and Starbucks and even Disney, you have seen how these recoveries have been. So 3M is one of those. We will see what happens tomorrow morning, but that is play number one. Then play number two, TLT, baby. So the bonds, they got killed. I'm getting destroyed on my post-Fed play, but like I told you guys, I've been talking about it here. No shame in telling you about the play, but my plan has been this 4.5, and that's going to be a TLT around the 90. So fact of the matter is, people are believing the Trump trade for now. Whether or not it's actually true or BS, if enough money is getting behind it, the momentum is for bonds to sell off. It's already been doing that post-Fed, the soft landing and data as we've been creeping along. Now the Druckenmillers of the world and people bringing up all these ideas, it is leading to a bond short. But like I'm telling you, there's a certain risk to reward around $90. I think $91.50 to $90.80 in these next coming days. It's going to bounce back and forth. And here's the best part. Regardless of what happens, whether the market's believing the Trump trade, the soft landing, remember, these two things are both weighing on bearishness on the bonds. The fact of the matter is, I do think in about 10 trading days, we are going to find the answer. So if it is a Republican sweep, I do think it'll be a little negative for the bonds in the short term, but if they sell off enough, that might just bottom out or top out on election day or shortly thereafter. And then again, even if Kamala, we may watch a similar type move. So I think the next couple of days, it's going to keep moving to this, but 4-5, I'm still set on that. But the only downside is that 4-5 and TLT at 90, this trade blows up if inflation comes back and the Fed is like, nah, we're not going to be cutting rates at all in 2025. Maybe if they start talking raising rates, that'd be absurd. But for the most part, even if they start getting bearish on rates, just like you've seen over the last 3 years, and we're kind of doing it again, and the bond vigilantes are behaving, that would be the way this blows up. Or just quite simply, if inflation goes back up. So I've been talking about this. I've been bringing it up a lot on the watch list last week. I'm still in that bond future play, and a lot of people say, what are you going to play? I'm going to play the bond futures. I might even go with TLT shares, but ideally I would want to play a bond future with a lot more time, not the front month contract, to make sure that I could ride it out there. But I'm waiting for around $90. I do think it will be tempting around here, but I do think if it doesn't like really flush, I think it'll take some time, and then before you know it, it's going to kind of set the battleground between 92 and 90 ahead of election, and then we will get the fireworks from there and see who wins and what people are really feeling about the trade and go from there. But that is play number 2. Watch out for that. And then finally, Disney. And I think this one's going to be an important one for earnings. They had news today, and it was surprisingly calm. And the way I'm looking at it, I think Disney wants to die or come back to life. If you haven't taken a look at its stock, it is literally chilling where it was around that last earnings at the beginning of the year. This was with the Nelson Pelt stuff, and they were able to do good, and people were getting excited. And then they dropped the ball after the shareholder vote and all of that stuff. So I think they are either going to do very well on this earnings or do very bad. They got competition from Netflix, and people are feeling good about that, but they literally just announced succession plan to Bob Iger and all that stuff in the future. They either going to have to back it up with good news, or if this was any other stock, if people really liked it, that CEO news, that would be enough to drive it. But I think people want to see what comes out of this earnings, and if it's good, I think Disney will get rewarded, and if it's bad, I think Disney will get punished. So we will see what happens, but those are the main plays as far as everything else that I did today. These were my plays. I decided to go with a Honeywell. They're going to be reporting this week. I grabbed 2 of the November 1st 237.5 calls and 2 of the 205 puts. I grabbed both of them at 45 cents each. Ideally, I will try to make these free. They both kind of moved up as the stock was bouncing around, so if I can make at least one free play, that is the goal. And then the second play I made, this was 3M, and I wanted to get free options, but they report tomorrow morning, so I grabbed next week 155 calls, and then I grabbed 116 puts. I grabbed 3 of each at 46 cents and 55, and then right before it closed, I sold 2 out of 3 of both of them. I thought I would be able to get them for free, but I didn't. I was able to get 2 extra cents on my puts, and then I sold the calls for the exact same price, or the puts the exact same price, and I made a little bit on the calls. So didn't really get much, but I didn't want to risk that much coming into it. So now I have like $40 both ways on 3M. We'll see if we get a hitter or not, and then I am going to keep that money that I saved to look for a post-earnings play. So there was that, and then I finally grabbed one of the Intels. They report a little later, but I've been telling you them and ARM after some of these chips, I think they'll be in their own little world, so I think it's just a matter of which one does good or bad. But I did grab the Intel November 15th, the 29 calls and the 17 puts. I grabbed 10 of each. The calls were 17 cents, and the puts were 14 cents. If I can lower the risk ahead of the earnings, I will, but I think they're probably going to move in sympathy after the next couple of weeks. So that's all I did. I'm still in my bond play and Baidu. Even we got the Baidu puts, but those have came down a lot from the last couple of weeks. Other than that, we got a couple of free plays, and I talked about it today. I had a lot of other free options expire, so remember, that's something that we've been doing. A lot of options will expire worthless. I did lose on those Tesla. That one wasn't free. That was just a whiff, but in general, any of the plays that I've seen expire last week, I'm glad that I made them free. So in this environment, make sure you're watching out for them and keep track of them. Other than that, though, I think we're going to be coming in here to the final days, finalize any moves ahead of the election or not, and then very shortly, we may either get a continuation or pivot in the market and then go from there. But Chad, that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember the baby camel. Oh, yeah, that's how you get through the eye of the needle. You get reborn, my friend. So, Chatadonia, drink that water. Stay hydrated and healthy. I'll see you in the morning. And, Horna.